Hello and welcome to The Pitch, brought to you by Livewire Markets. I'm Ali Selby, and today we're throwing gold and Bitcoin in the ring to find out which is the better asset class. To do that, we're joined by State Street Global Advisors, Robin Tsui. Thanks so much for joining me today, Robin.
Thanks for having me.
Gold, like Bitcoin, has been quite a divisive asset class. Both has been described as a store of value and both have done really well over the past 12 months. Can you take us through the similarities and differences between gold and Bitcoin?
The similarity between Bitcoin and gold obviously is the independency from the government. So Bitcoin and gold can potentially protect investors in terms of currency depreciations because both asset classes are not tied to a government's monetary policies. So that's the similarity between Bitcoin and gold. There are three key differences between Bitcoin and gold. The first difference comes to the fact the real life demand is quite different. So if you look at gold, what drives gold prices demand comes from the jewelry sector, comes from the investment sector, central banks, and also industrial. But if you look at Bitcoin, it's purely driven by investment sector. And the key difference between Bitcoin and gold is that central banks around the world do not invest in Bitcoin, but they invest in gold as a way to diversify the foreign exchange reserves. The second reason is the liquidity as well. Gold is traded about 163 billion a day on average US dollars. That's about 9 times larger than Bitcoin. So in terms of the liquidity profile, gold has much larger liquidity than Bitcoin. And that's why central banks, institutional investors, they prefer gold over Bitcoin because of this liquidity profile. And thirdly, the ability to hedge against equity risk. Gold is a perceived proven asset to do that. But if you look at the past 15 years, when the S&P 500 is down by about 10%, Bitcoin's average drawdown is about negative 37%. So that factor alone does not provide a perceived benefit in terms of diversifications.
How are they valued? How do you value these asset classes?
Both Bitcoin and gold, they don't have cash flows, so we can't really adopt a discount cash flow model to value Bitcoin and gold. But one way we can sort of look at the trends of Bitcoin is look at the currency market, look at the underlying demand through investment. We look at some of the positioning in Bitcoin and gold as well. We can get a gauge in terms of where the monies are heading. So we can look at the investment flows into Bitcoin and gold to kind of gauge the direction of both asset classes. But in reality, it's very difficult to give a value to Bitcoin and gold because they don't provide any cash flows.
Bitcoin has 5 times the performance of gold over the last 12 months. Why do you think that is?
Bitcoin, I think from our perspective, it's quite speculative. Obviously, the price performance has gone up by 5 times more than gold. But if we look at volatility, it's actually quite high as well. So if we look at the analyzed volatility of Bitcoin, it's about 93% last year compared to gold, about 15% per annum. So obviously, price is up 5 times more, but volatility is about 6 times more as well. So the risk and return profile of Bitcoin is extremely different to gold as an asset class.
What's your outlook on the two asset classes over the coming 12 months? What do you think we'll see in terms of performance?
We think both asset classes have more room to run in terms of demand. From what we're seeing now, the flows into both Bitcoin ETFs globally and also the flows into gold-backed ETFs has been returning because we probably expect central banks around the world, especially the Fed, will start to cut rates in the fourth quarter, and potentially that will be beneficial to non-cash flow assets like Bitcoin and gold. But from our perspective, we do encourage diversifications. So it's okay to have some Bitcoin, but it's more important to use gold as a diversifier, as a defensive asset to hedge against your exposure to equities and bonds.
Can we get a little bit more granular? What are you seeing in terms of preferences on gold and Bitcoin for different regions around the world?
So this year we've seen quite a strong inflows into Bitcoin ETFs in the US because recently at the start of this year they launched the first Bitcoin spot ETF. We've seen close to about 23 billion Australian dollars net inflows that's gone into the Bitcoin ETFs. So it's quite a substantial investment in terms of the flows. From a gold perspective, it's quite interestingly, if we look at different regions, we're seeing different sentiments. In the US and the EMEA, we saw outflows in the first half. That's because the interest rate environment is a lot higher than, let's say, Asia or even Australia. But in APAC, we're actually seeing very strong inflows into those gold-backed ETFs because the interest rate environment in Asia and APAC is a lot lower than the West. And also the need to hedge against the local currency depreciation in Asia is becoming a more important factor in Asia as well. So in the first half, we're seeing, yes, very strong inflows of Bitcoin, but also very strong inflows in Asia for gold-backed ETFs.
Wow, okay. Well, thank you so much for your time today. It was awesome to feature you on The Pitch.
Thank you.
If you enjoyed that too, don't forget to subscribe to Livewire's YouTube channel. We're adding so much great content just like this every single week.